Let me ask you a question. Are you interested in options trading, intrigued by it, but honestly afraid of it? Thinking it's too complicated or too risky, or you have to have a whole lot of money? Well, that's the boat that I was in a year or so ago. Welcome back to Old Guy Talks Money. Like I said, a year ago, I knew about options trading, but was terribly afraid of it. Risky, I thought it was too complicated. I didn't want to trade on margin, really just didn't know anything about it. Started talking to a friend about it at work, and he explained what he was doing, and I did some research. And in August of last year, I placed my very first trade. On that trade, I made about $20, and I was tickled to death because I made an extra $20 on stock that I already owned. So I continued to learn and continue to trade and kind of did that through the end of the year. Made some shifts in my portfolio to free up some cash so that I could concentrate on two positions. And then this year, when I started my channel, I started recording my results because I think there's power in just somebody out there showing what they're doing, how they're doing it, how much money they're using, and what they're making. And I'm being as transparent as I can to the point that a month ago, I actually showed you how I place a trade from start to finish. I recorded the beginning of it, then came back at the end of the week and show you how that trade had ended up. So today we're going to look at what September looks like. Before I get started though, I've had new subscribers come to the channel. Just wanted to thank you guys that are joining and that have hung in there with me. Obviously, I'm a small channel. Love to see that grow. So hit the like, subscribe. So before we dive into the numbers, let's just a real brief recap. I have two positions that I'm trading. TFC, which is Truist. That's a regional bank, and it's the combination of BB&T and SunTrust. And then I'm also trading QQQ, what I refer to as the Qs, which is an exchange traded fund, which is designed to mirror the performance of the NASDAQ. So if that, ETF, you're wondering what that is, want to know the difference because maybe you've heard of that and you've heard of index funds, you want to kind of know more about the difference between the two. They are so similar. Drop me a comment, say, hey, do a quick video and explain why I should pick one over the other. I'll be happy to do that. All right, so two positions, Truist and the Qs. If you watch some of my earlier videos, you'll know that I have not been trading the Qs very much. I went into that stock at 494 and the bottom fell out from under me and I've just been sitting on the sideline. I'll say this that I've said every time I make this video. One of the reasons I like this strategy is I'm only trading stocks that I'm willing to hold for the long term. Okay. But you'll see that the stock prices come back on the Qs and I have actually been able to put them back into play. So let's look at what happened. All right. So here's the first week. I have a taxable brokerage account and I have a Roth IRA. I have 800 shares in each. Each options contract is 100 shares. So I traded 8 contracts on my brokerage account, 8 contracts on my IRA. My basis in those shares is $43.50. I sold the contracts with a strike price of $43.50. I made 18 cents on my brokerage account, 19 cents per share on my Roth IRA. And if you're wondering why they're different, watch some of my earlier videos. When I do these trades, I always use a limit. And the limit sets a floor that when I place a trade, it will not execute below, but it can go above. So I place these with an 18-cent floor. And then obviously the market moved up on me and I actually got 19 on the Roth IRA. That's why this is so important to use a limit when you place these trades. So made $140 and $148 respectively for the week, right at a 21%, 22% return. All right, let's go to the next week. Still sitting on the sidelines with the Qs. Same 800 shares in each, same cost basis, same strike price. Did a little bit better on the premium. So 20 cents each per share, made right at $156. You're wondering why it goes up and down. The closer your market value gets when the trade is placed to your strike price, the better the premium you're going to get. You can see that when we got to the end of the week, the market had pulled back, closed at 41.84. The way this works is that contract expired. I get to keep the premium, but my shares did not get exercised and did not get called away. All right, so here's the next week. Now, this is the trade that I actually recorded and show you start to finish on. Um, I placed it on Monday and had to fly out of town. When I got to my destination and checked my phone, trade did not execute that day. I got up early before meeting started, placed it again. It did execute. Exact same trade as the previous week, 20 cents per share, made $156. All this is the same, 23% return. All right, here's the last week of the month. Now you'll notice the Qs are in play and Truist is not. All right, when I do this, I never will set a strike price below my cost basis. And the market on Truist was just not there. Checked on Monday and on Tuesday and on Wednesday, even as late as on Thursday. Premiums were just not there with the strike price at 43.50 that I wanted. So I thought, I'm just going to sit on the sideline. Market price of the Qs had come back and it did allow me to execute a trade. Now, again, look what I did. My strike price is the same as my cost basis. These get called away from me. Yeah, I don't make gain because obviously it's nice to get both premium and gain, but I protect myself from taking a loss. I did make $145, $1.45 per share, 200 shares, so made right at $300, or about a 15% return. My goal, and I don't know if it's a goal, but what I would prefer, I want to stay in the 20 to 25% return range. That's my preference. Not telling you there's anything magic to it. It's just like if I can do that, if I can throw off a 25% return, pretty comfortable executing the trade, especially considering when I do these, I'm not going to lose money on my basis. Okay. Again, at 15%, I was happy with that. The Fed started lowering rates. I'll show you in a minute. Let's go on down. So for the month, on about $168,000, a little bit lower, on $168,000, I made $1,200. You calculate that on an annualized basis, it's bumping 9%. The Fed started lowering rates in September. My high yield savings account's already gone down to 4.25. So you can see I essentially doubled what I'm making in my high yield savings account doing this. I still own the shares. I can tell you that October has started off good. I was able to put Truist back into play and was also able to put the Qs back into play. So I'm hoping, knock on wood, that October will be a good month. So, guys, that's what happened in September. Again, thank you, new subscribers. If you're just watching this and you're not a subscriber, please hit that like and subscribe. It will help me grow the channel. If there are things that you're interested in, retirement related, finance related, and you just want another person to listen to, another, kind of opinion out there, and I know what we say about opinions, that's what's so powerful about YouTube. People talking about what they're doing, they're living these experiences and being transparent and sharing it. I started options trading because a friend of mine said, "Hey, I'm doing it. This is what it looks like." I looked into it and I thought, I think I can do this. And I don't think there's much risk here. I'm very happy with what I've done since I started just over a year now. So, guys, again, if y'all have found this video to be a little educational, a little informative, maybe a little entertaining, again, like and subscribe, and I will see you in the future.